of Money with Santosh Sirur.
Hello and welcome to another episode of The Sound of Money. On today's episode, we have a very special guest, Monika Halan. Monika Halan is a trusted personal finance writer, speaker, and author who helps families get their money decisions right. Monika Halan's 30-year career spans across media, public policy, and financial education. She is the founder of Dhan Chakra Financial Education and author of the best-selling books Let's Talk Money, that has been translated into Hindi, Marathi, and Punjabi, and Let's Talk Mutual Funds. She is the chairperson of Sebi's Advisory Committee for Investor Protection and Education Fund and a member of the Hybrid Securities Advisory Committee. She has a public policy experience and has served on several high-profile Government of India committees that have changed the regulation around consumer protection in India. She was also a director of the Financial Planning Standards Board India and is a member of the Editors Guild. She has worked across various media organizations and also has had 4 successful television series around personal finance. Monika is a MA in Economics from Delhi School of Economics and an MA in Journalism Studies from University of Wales. A Yale World Fellow 2011, Monika Halan is based in New Delhi and joins me from her home in New Delhi. Hi and welcome, Monika, to this Sound of Money episode.
Thank you so much. I'm delighted to be here.
So I'm sure it's been a pretty busy month with the release of your last book, which is Let's Talk Mutual Fund. How has been the response, Monika, all through?
You know, as it always happens, the second book triggers more sales of the first, which is what we've noticed as well. Because honestly, Let's Talk Mutual Funds is a sequel to Let's Talk Money. The way that that second book came about is that while writing Let's Talk Money, when I was at the chapter on mutual funds, I said, there is so much to say. I'm running out of space allocated to the chapter. Maybe I need a separate book. So I wrote that and I forgot about it. But fans of Let's Talk Money did not let me forget. And they went on messaging me on social media platforms. When is that book coming out? So I thought it's a good idea to actually write that book down.
That's good.
So it's really, if you've read Let's Talk Money, Let's Talk Mutual Fund just flows seamlessly on. If you pick up Let's Talk Mutual Funds first, I think you will try and reach out for Let's Talk Money to get your basics in place.
True.
So that's how this book came about. And it's been good. Like I'm getting excellent responses. And one barometer really, which you can't fudge, is the Amazon reviews.
Yeah.
So it's interesting for me to go and read those reviews periodically to see what people have liked. So one of the things I think is the simplicity. They like the fact that I could possibly explain some complicated jargons and stuff to them.
Interesting. You know, the first question I have for you, especially when it comes to investments, we always feel that, oh, we are educated, literate. But I have myself in person, when I interact with a lot of my friends, my community around, there's talk of investing in FDs or FCNR deposits, especially when I'm here in Hong Kong. The investor education about mutual funds is there, but what is limited to is more about long-term investment, dekh lenge, 20,000 dala tha kind of mindset. It's still prevailing. And I'm sure books like these will definitely help and will go a long way in helping in investment. My question to you is it true, and is it your experience also when you've interacted with where people associate these kind of investments with returns? Kitna milega? That kind of mindset is still there. And they really don't think of it more of, they think more of it as a long term, but don't bucket it between the short term, the medium term, and the long term. Is that something very common even yet today?
No, I think you've really got the problem by its toe. You articulated it really well. And I have taken pains to explain through the book, Let's Talk Mutual Funds, that don't get fixated only on the return. Return is just one of the attributes of a product. It is also safety, being fraud-free, liquidity, the costs, the holding period, what are the costs of exiting from this before the product is matured. So also in terms of utility, how is it that that product can serve you? And we'll just think about this product called the mutual fund. There are 37 categories, 11 in equity, 16 in debt. Now, a person obviously doesn't need all of that. So the attempt has been in the book to nudge people into saying that we all have finance problems, like we need money at different times in the future, whether it is 3 months later, 6 months, 2 years, 5 years, 10, 15, you need a product which matches that holding period. So that is one way to approach it. Not just that, will I get more return on a liquid fund? You don't look at a liquid fund for high returns. You look for liquid funds for certainty and a little bit extra over the fixed deposit that you might have.
Yeah.
But a high return is not your criteria for buying a liquid fund. It is something very different. So I'm trying to move the conversation to saying you match a product which fulfills that particular goal or that particular problem that you might have, and don't get just fixated on return, because returns is something which is very important, but that's not the only thing.
Yeah. Another very, and I call it, and I know in your first book you had mentioned, shark infested waters. I distinctly remember that, because a lot of my friends and I personally, I too have been grappling with that, is about, insurance wrapped up with this mutual fund product. And any private sector bank, public sector bank, people, especially NRIs, when we go down to India, the first thing they try to sell is this insurance, right? It is absolutely, I mean, you and me, we are in the same world, so we know how to avoid it. But imagine students, senior citizens, ones who've just retired, just getting gobbled up in this real, genuinely, as you rightly put it, shark infested waters. They can't just step out because they trust that banker end of the day, right? So what is your view on this? You have a very strong view, I know, but what exactly, if you could articulate?
My view is that it's a regulatory failure. This is textbook market failure. And we cannot blame either the frontline banking staff or the investors.
Yeah.
Investors simply cannot do the kind of work required to understand these complicated, jargon-filled policy documents. That they might even do the work. What they cannot do is understand that the frontline banking staff is purely lying to them. There is no other word. I cannot put it politely. They are simply lying. And in some cases, it is fraud, because the investor might think she's buying a fixed deposit, but the signature is being taken on a regular premium insurance policy. I mean, we all know. So in my mind, when a problem is so rampant, you cannot blame the frontline staff of the banks.
True.
You would blame the management, the board of directors. You would blame the regulators, both insurance as well as banking.
Absolutely.
Because that is where you look, it's like saying that you have traffic rules, which sometimes red is green, go, sometimes red is stop. Right? So if you have a flawed traffic system, you will have accidents, which is what we are having. We have a deeply, deeply flawed regulatory structure, which causes the product to be toxic. And you have a flawed regulatory view that this is really the investor's problem, which the RBI articulates.
Yeah.
So I think the problem lies at, so you need just better regulation. You need a marketplace which is not so badly skewed against the investor. Yeah. So it's been a bugbear for me. I haven't understood why policy change is so difficult. I have also seen Sebi respond to both. So I've been part of many government committees, the Swaroop committee, the Bose committee.
Yeah.
Sebi as a regulator has taken note of the work that we did in those committees and has really implemented it. And we can see it in the way mutual fund product has got tighter and tighter regulated.
True.
But the same I have not seen happen in the other two regulators. So that is something which befuddles me, and it is deeply saddening to see average people being ripped off, senior citizens being ripped off, their life savings going into these toxic products. So yes, it's a policy and a regulatory problem, according to me.
Let's come back to mutual funds, and where what I want to know from you, and again, since you've been a part of the SEBI committees, you've seen the other side of it, and the regulatory aspects. When it comes to mutual funds, if you could just articulate what kind of simplicity is there in terms of investing in these mutual funds, what are the advantages one can, so that we educate our guys to get into the mutual fund, especially in the recent months, in the recent years, in fact, you do see a uptrend in the mutual fund investments. A lot of awareness. In fact, a couple of months back, there was that famous ad, ad as a statement from one of the famous car companies where he said, people are investing in mutual funds and not in, in buying my vehicle. Yeah. So that awareness seems to have happened. Yeah. Sorry. Yeah.
No, that's right. And also, if you see the SIP book, it is what, 14,500 crore a month.
Yeah.
I don't see any other market in the world, and you might know this better, where a risk product has investors voluntarily signing up for long-term regular investing.
True.
So something in the communication has gone right.
Yeah.
And also in terms of what the work that Sebi has done to make the product fraud-proof. So we haven't had an instance of an AMC running away with anyone's money, right? So you've got market risk, you've got all the other kinds of risks.
Yeah. Yeah.
But you haven't had a vanishing mutual fund, which is your base level of security that a regulator needs to provide. So, so even in a risk product, that risk of fraud is not there. We had the whole crypto story where so many ICOs were launched, they collected money and they vanished overnight.
Yeah.
So at the second step, then you will say that the money actually sits in a trust, and neither the AMC nor the sponsor can feed off that. They cannot siphon off this money. True. They cannot lend it out anywhere that they want. True. Then post that, what Sebi has done is gone on cleaning up the product. A financial product is really invisible, and it is in its description that it's created in the mind of the investor. Now, if that description is flawed, then the investor is buying into a flawed product. So this is where disclosures matter. So in terms of disclosures, Sebi has done seminal work in terms of their riskometer, categorization of mutual funds, the use of benchmarking. The other thing they have done is gone on squeezing the costs. So the idea was, when the industry was very small, you could have higher costs. But as exponentially this industry has grown, since you, the industry, have not reduced costs on your own, let us do it. So Sebi is in this third round of reducing costs right now.
Phenomenal.
So the investor doesn't have to do that. Then giving options like a direct plan to do-it-yourself investors, putting the regulations around stopping that upfronting of commissions. I mean, I think India is one of the very rare markets in the world where mutual funds don't carry front loads. And we know what kind of churning that front loads encourage distributors to do. So my premise always has been that if you clean the marketplace up, investors will come. They will build the trust there. The ball, I think, fairly now is in the investors' court, because as far as a regulatory work, I feel to push harder would be to really push the industry far more than it needs to. The ball really is in the investors' court, where they need to understand the product. You have a car. If you don't know how to drive, you will have an accident. So you've got a state-of-the-art car. Please learn to drive. So my communication with investors is, please learn to drive, because you will get there faster, better, safer, if you know how to drive this car. True. We, under the bonnet, have made a safe car. Agreed. But you please learn to drive it.
True. In fact, Sebi, right, the very edifice of this mutual fund, the framework, the structure, of course, I'm sure it was the 1991 liberalization, followed by, of course, unfortunate, but I would say in the long run, it turned out to be a better good thing because of, the 92 scam. But at least the edifice or the foundation is laid very strong, right? And over the years, it's been,
Correct. That was the policy view, that you need a retail instrument which is tamper-proof as far as siphoning money off goes. So really, the aftermath of the 92 scam was very good for the DNA of the mutual fund industry.
I wanted to talk to you about the benefits of SIPs, because end of the day, it's more, of course, it's always a debate with whether it should be a lump sum investment or the SIPs, but SIP route is probably the best, and probably, especially from a retail investor standpoint, and that's been what has been witnessed. How has it, especially if you could explain the rupee cost averaging concept?
The concept is very simple that if you, before even the rupee cost averaging,
Yeah.
in the systematic investment plan, basically, look, we don't have large amounts of money. We've all been salaried people. Money comes in chunks at the beginning of the month.
Yeah.
So your investing vehicle needs to match the earning rhythm, so that as the money comes in every periodically, that periodicity is maintained in your investing rhythm as well. So this product, it's like a recurring deposit. You get into the habit every month of saying, I commit to 10,000, 20,000, 1 lakh, 2 lakh. At whatever level your income and your saving capacity is, you commit that much. So it's matching your earning rhythm. You are not thinking so much like a trader or a very HNI investor who has chunks of money to deploy. Most people don't. So in that way, that product really solves a need. The second, of course, is that when you do this systematically, there are times when markets are up, there are times when markets are down. So because you have a predetermined amount that you're committing, when the markets are up, you will tend to buy fewer units. When the markets are down, you will tend to buy a greater number of units. So just in terms of smoothing out your average price per unit, this rupee cost averaging, which has become the systematic investment plan, is a great tool. So both of these work very well. And, more than the finance, it's the emotions, which is that when you've committed to this, you stop looking at the market every day, because it is happening systematically. It's happening on autopilot. Do you know, in the last run of the Indian markets, March to July, who has been the winner in India?
I'm sure
it's not the HNI. It is not the foreign portfolio investor. It is the humble SIP investor. Because simply they went on like, ants, and the whole story, they just went on and on and on through that whole slump, late 22, early 23 slump. They just went on investing when markets were flat or down.
Yeah.
So when this jump came 15%, they are the ones who have benefited.
True.
So it really builds that habit of regular investing without looking at what is happening short term to my money.
You've always given a lot of impetus on emergency funds availability or emergency funds planning. Could you dwell a little more on that topic? And as you say, it is equally or rather more important than your retirement solution.
Correct.
So, yeah,
that's right. Simply because retirement is a long time away, and it's here and now, actually, which is so important to me. One of the reasons that people were not committing to a risk-based product like equity, whether it's direct or through mutual funds, was the fear that what if I need the money suddenly? So that the problem that the investors had with committing to a risk-based product which pays off over the long term was simply the fact that what if?
Yeah.
Now this emergency fund solves this what if problem, that this is my money. If I make a pool of money which keeps me going for 6 months to a year, if something happens like a job loss, COVID, whatever, then I don't need to dip into my equity portfolio. I have liquid money, which is where the whole categories of debt funds, which keep your capital safe, which the principal is kept safe. The liquid, the short duration funds. Again, Sebi's riskometer is an excellent tool to gauge that risk. Yeah. So you really use products based on when you need the money. Emergency fund, you need money at short notice. It cannot be in a volatile product. It has to be where that volatility is smoothened out completely, which means lower return. You cannot have emergency funds targeting a high return product like equity. So therefore, the emergency fund need is both really to fund an emergency and also to have that mental satisfaction. If things were to go wrong, I have this money. I don't need to upset my long-term portfolios, which, especially when there's an emergency, there could be a global emergency and markets are crashed. Yeah. So true. People who sold off at 29,000 Sensex in April 2020, really, I mean, I feel that if they had this stash of money, they needn't have taken such a toxic decision which has
Absolutely.
destroyed their net worth, unfortunately.
True, true.
So it gives you holding power. It allows you to take a breather and say, okay, I have 6 months of money. I don't need, and most things get sorted in 6 months.
True.
Unless you're in a deep recession or you're Japan, things
Yeah,
get sorted out.
true, true. I wanted to know a little more also on goal-based investing. It's an amazing term, fundamentally a strong term, but do you see investors really looking at it in that aspect? Or is it just about the investments that happen on an SIP that happen? Is anybody really giving heed to that kind of a concept seriously in your
I
experience?
think that little bit of goal-based investing is beginning to happen, especially with the young people. They're
Hmm.
beginning to target a holiday, they're beginning to target a gadget or a vehicle.
Hmm.
And that sort of builds in the habit of goal-based investing. And honestly, it is very difficult to project into the future to figure out to the nearest lakh how much I need for my retirement. So these are ballpark numbers.
Yeah.
You do a ballpark, I need about that much.
Hmm.
And then you start working towards it, which is, it's so anyone who's working with a good distributor or a planner, I think they do very solid goal-based planning. I
Hmm.
need money in 5 years to send my kid abroad. I need 40 lakh, 50 lakh, 1 CR. What
Yeah.
am I going to do today?
Hmm.
So those kind of plannings are beginning to happen.
Hmm.
Possibly, it's not very widespread. People
Hmm.
have, they still, they still think in terms of, I have a flat in Noida, I'll sell it.
Yeah.
But that flat in Noida might not get sold because markets are down and real estate is such a chunky, clunky asset.
True.
But the beauty of a financial product, it's only people who have tasted it, they
Yeah.
understand how seamless it is, how low cost it is, how instant it is.
Yeah.
So it is, again, to your first point, it's not just the return, it is also all of these things. How quickly
Hmm.
can you get to your money?
Hmm.
Debt funds will come in 1 working day. Equity will take 3 working days at very minimal cost. Right.
Absolutely.
So those are the things which really become important.
Yeah. I have a question regarding one of your target audience, which I know you have been mentioning about it, is for women. I guess
Yes.
you do in due course plan a book to write for women.
Right.
What are the thoughts behind that? Has that been something that has it as a, because the reason is one of my own episodes on the Sound of Money way back in May 2021, I recall. I had to do a special episode because a lot of men, whether be it husbands, fathers, brothers, passed away, unfortunately, for whatever, during the
That was
COVID.
very
And yeah, and there were so many women folk who really had no clue, no idea of their passwords, their bank accounts, etc., everything. In fact, the common theme was the women would say is, just tell me where to sign, I would sign it, and forget about it. In fact, I came across a lady who has her blog, and I interviewed her. But that really, it was like, of course, the timing was terrible at that point in time, but that's not about the time. It's about any time anything can happen. So is there something that you have on cards for women?
No, definitely a book for women is on the cards. I did not write Let's Talk Money, keeping women in mind. But what I found is a lot of husbands bought it for their wives, brothers for their sisters, fathers for their daughters, just saying that, look, this is not so tough. You
Hmm.
are resisting it. This is not so tough. So
Yeah.
partly the reason is that women are kept out of the money conversation. It's
Hmm.
also about the division of assets in most Indian families. They wanted to go down the male line. So
Yeah.
it's better to keep the girl child out of the money discussion, unfortunately. So that's one of the main reasons I feel that girls are not included in this conversation, because you will, you will basically take on somebody else's last name and you will then be part of that family.
Hmm. Hmm.
Uh, and the other thing is the whole social messaging
Yeah.
about girls have no head for numbers, you're too cute to worry about money.
Hmm.
Uh, you're showing so much trust that you will blindly sign whatever is put in front of you. Oh, I just signed.
Hmm.
What is this? It's a statement to say I trust him so much,
True.
which I feel is a little, I would say a little immature,
Yeah.
because yes, you trust. We are not talking of trust here. We're talking about your ability to decode a product and to even know what you're signing off.
Yeah.
So, uh, when you speak to the women who have had bad marriages, Their regret is that we just signed off things we had no idea. So this is not to say that your marriage will break up or there is a bad outcome ahead. I'm just saying that, you look after your diet because you want a healthy body. You do a lot of things which might not happen, but yet you do them.
Yeah.
Similarly, this is empowering yourself about money, knowing where the assets are, what is your share. These are basic conversations. And what I tell groups of women is that if you start asking questions on the dinner table and there is displeasure, that's a red flag. Okay, so take that as a red flag. If your desire to participate and to ask what are the assets, in whose name are they, what is my share?
Yeah.
If there is a discomfort around that, please take that as a huge red flag.
True. One last question before we leave, and it's not a question actually, but it's something where I have seen your tweets around it, especially when it comes to the millennials and the Gen Zs, and especially the ones who are going to start their, in the workforce. Is there any effort that is coming across as an investor education for them, where when they join their jobs, they get into the habit of investing? Is that something that you've come across with your interactions with universities, etc.?
So the problem is that we don't have financial education as part of the curriculum.
True.
And the schools and universities have a problem because everybody with a social agenda wants to load the curriculum. My solution is, and I'm hoping to actually write that textbook, is to have an optional course which schools could offer, which is just the basics of money management. So yes, you work so hard, but when the first salary comes in, you have no clue. And that's the feedback I have got from a lot of young people get in touch with me. So the good thing is that they get in touch to say how much the books have helped them. And they also say that we wish we had something like this in our courseware. So that is, again, I think a gap which needs to be filled. And at a future date, as soon as I have that bandwidth, I would like to write that. Again, as an optional elective course, which universities and schools can offer to students who wish to take it.
True, definitely. Thank you so much, Monika Halan, joining us on this episode of The Sound of Money. All the very best to your books, especially Let's Talk Mutual Funds, and I even come across Let's Talk Money rocking across bookshops.
Thank you so much.
Thank you.
Sound of Money with Santosh Sirur.